Joining us now with some more analysis, Richard DeKaser. He's an economist at Wells Fargo. So, Richard, do you agree with that last comment in the reporter's package there about housing and the momentum that it has?
Oh, absolutely. I think we've been watching the housing market for 3+ years now, and 2009, 10, and 11 were all best described as bouncing along the bottom. We had some false hopes when perhaps tax incentives stimulated demand, but then they'd fall back afterwards. But what we're seeing now is very different. The past year, 9 months in particular, has seen sustained increases in home prices, home sales, construction. You mentioned 10% growth in prices for existing homes year over year. There's all kinds of house price metrics, and they all agree now for a change. They're all talking so far this year to date gains of 5 to 10%, and if you focus on annualizing the rates of those price increases, we're into double digits.
Right.
Home sales are up 10%. And yep, go ahead.
Let me jump in because you've thrown out a lot of numbers there, and
Sure.
we know how volatile these statistics are, and often they are revised. So it makes you question, is this housing rebound for real? And if it is it sustainable? You mentioned that a moment ago.
Yeah, I think it is. And I'll tell you, the past year has been a classic case of the volatility in housing numbers. This winter, December, January, and February, we had freakishly benign weather, drier and warmer than usual. That surely stimulated home sales in the wake of those months. And then we gave back a little bit of that in the springtime. But reading through the kind of volatility that can come from tax incentives, from weather, we still see these solid increases. So again, home sales, unit sales, new, existing, all packaged together, up 10% year over year. Construction up 30% year over year. Prices, again, varying, but depending on your measure, 5–10% up year over year. These are all sustained increases. So for example, the price metrics I mentioned, those have actually posted increases in each of the past, again, 5, 6, or 7 months, which is the first time we've seen that since before the bust began.
Okay. Let me talk to you a little bit about home prices. You mentioned that a couple of times. So what about this so-called wealth effect? Are people feeling a little bit better off financially so that they're ready to spend more on other things? Is that happening yet?
Somewhat. It is true when asset values rise, when people's wealth increases, their confidence improves, and that does have a small impact on consumer spending. But this concept of the wealth effect, which economists toss about, usually for every dollar increase in wealth, 5 cents being spent over the next year, really is more of a long-term phenomenon with lags of 1 to 3 years. So I think we still have the best of that yet to come. In other words, with prices having increased over the past 9 months or so, that's not really had much of an effect.
Okay.
Another area, though, where we have seen some benefits is as home sales improve, people will begin increasingly to purchase those add-on items, big ticket items like furnishings and appliances, which add kick to the housing market, which on its own is only about 2% of GDP.
All right, we're going to have to leave it there. Nice to see some positive trends coming up in the economy. Thank you so much for your time. Richard DeKaser, economist at Wells Fargo.